Ahmed is a person that I made up, by the way. He doesn't really exist, but all of the stats that I will share about Ahmed are true. So Ahmed is this fictitious Muslim character that started working in 1981. And Ahmed was like an average person, okay? He was so average that he earned $26,000 a year in 1981, which was just below the average family income in the US at the time. And Ahmed was also average with money. You know, he wasn't that smart about how to spend, how to save, all of this stuff. But there were two things that he did that were really smart. One was that he didn't get into debt. Very important, he did not get into debt. Secondly, he decided that he's going to save and invest $400 a month and put it into the stock market. So he does this every single month, and he does this for 40 years. $400 a month for 40 years. Or about 39 and a half years, something like that. It's not exactly 40 years. And at the end of that, he decides, you know, he wants to retire. And so he looks at his account. How much money do you think he has in his account at this point in time? Anyone guess? 10 million? 2 million. 2 million. So the amount of money he put in over 40 years, $400 a month, is $200,000. Right? He put in less than $200,000. $191,000 is all that he saved up. But what happened was the total balance became $3 million. $200,000 saved. If he didn't invest it, would stay as $200,000. But $200,000 invested over 40 years became $3 million. So where did the other extra money come from? It's the power of investing and compounding, right? Because in the first year, he put in $4,800. It grew a little bit. The market wasn't great that year. Second year, he had a little bit more gains. Third year, it grows quite a bit. After 10 years, he's doubled his money. He put in about $50,000. He has about $100,000. After 20 years, he has 7 times the money. After 20 years, again, he has 7 times the money that he started with. And this continued, and Ahmed's portfolio value over 40 years continued to increase. So you might think, oh, maybe 1981 was a great year to invest, right? Maybe Ahmed got lucky. But reality is that the stock market, on average, has yielded about 8 to 10% returns since the 1800s. Okay, this has been the case consistently throughout time. Now, sometimes there's a down year, sometimes there's an up year. So if you look at the stock market returns, the reds represent the percent down each year. The greens show the percent up each year. There's more greens than reds, and the greens are larger than the reds. So you have good years and you have bad years, but on average over the long term you do well. And the reason this works so well is the power of compounding. Because the money, maybe it was $1,000 to begin with, became $1,100. That $1,100 then grows on top of $1,100 into, $1,250, and then it grows and grows and grows, and pretty soon it just takes off, right? So this is just the importance of investing. And what is investing? I'm not going to go into detail here, but the idea is instead of just saving money, you're putting it into a project expecting for it to grow over time. You want to benefit from profits. Why do we invest? Well, if we save, this is another example, if we saved here, we would have saved $120,000 over 20 years, and it's $300,000 if you invested instead, right? Why do we invest? To grow your money, but also to beat inflation, because we know inflation continues to make the value of our money go down, and to beat zakat. What do I mean by beat zakat? Why is a scholar standing up on stage talking about beating zakat? Because there's a hadith of Rasulullah sallallahu alaihi wasallam, or maybe Imam al-Tirmidhi says this is a hadith, but this is an athar that can be narrated, that can be attributed to Umer radiallahu anhu, where he's reported to have said about the wealth of an orphan. He said about the wealth of an orphan, if you're a guardian responsible for taking care of the wealth of an orphan, فَلْيَتَّجِرْ فِيهِ. Go ahead and trade with that wealth. Invest that wealth. Do something with that money. Don't let money just sit there. Invest it. Why? Don't just let it sit there. Why? حَتَّى تَأْكُلَ الصَّدَقَةِ. Otherwise, zakat is just going to consume that wealth up. So $100 this year, when I pay 2.5% zakat, will become 97.5 next year. The year after, it'll be something like $95. It just continues to go down in value. The entire institution of zakat, there's many reasons Allah put zakat in place, but one of the reasons that Allah put zakat in place is to encourage us to invest our money so that we can take some of those profits and give those away to zakat. whole session on zakat yesterday, so I won't go into detail, but we want to beat inflation, we want to protect against zakat, or we want the zakat to come from money that we're making, and then we want to grow our money over time because it grows significantly more. Why people don't invest? They say, I don't want to lose money, but they're actually losing money by not investing. They're trying to time the stock market. They don't think they have enough money. You can invest nowadays with $25. You don't need much money. And a lot of people say, I don't know how to. So we'll quickly go through that. But before we do, every time we want to do something as a Muslim, we need to focus on our intentions. We need to make sure we're doing everything sincerely for Allah. But we also need to realize that the investment that we're doing should be for a purpose. Because in Islam, just the idea of, oh, I'm just going to make money, why? Just to make more money, just to be rich, with no other end goals in mind, that's not very Islamic. Our intention should be goal-based. And, Sheikh Hassan, another we used to say, the problem with Muslims nowadays is not that we have bad intentions. The problem with Muslims nowadays is not that we have bad intentions. The problem with Muslims is that we have no intentions. We go through lives, we don't even think about what we're doing, right? If you go to bed at night, instead of just going to sleep, if you do your azkar, you do your dua, and you say, oh Allah, I'm going to bed so I can be rested, so I can wake up with the Fajr properly, so I can be a good worshiper of Allah, so I can be a solid employee, and a good father, and a good mother, and a good this, and a good that, and so I can study well. Every one of those intentions that we have, we get rewarded for. 8 hours of sleep, every single second, we're getting rewarded. You're driving to work. You just drive with no intention, no reward. You drive to work and you say, oh Allah, I'm going to work so I can earn for my family because you said feeding my family is charity, I get reward. Right? So we need to add intentions. And by the way, we don't need to just have one intention. We can have many intentions. Oh Allah, I'm investing money so I can save up for Hajj. I'm saving money so not only so I can save up for Hajj, but also I will pay zakat out of it. Oh Allah, I am earning money so that I'm investing my money so that I can, through my investment, put it into companies and products and services that will benefit the Ummah, that will benefit humanity, that will create jobs, that will boost the economy, that will provide beneficial products and services, right? And so there's so many intentions we can have behind investing. Don't just invest in like, I just want to get returns. Add other intentions. Invest in beneficial companies. Invest in good companies. Invest in those products and services that will benefit humanity and make that intention, and our rewards will just go up. So we should make goals. Hajj, college tuition, we want to buy a house, we just want to give more charity, whatever it might be, even retirement, it's okay. There's a hadith of Rasulullah sallallahu alaihi wasallam where he used to, when he had, sometimes he had extra wealth, he would save some of it. He saved dates for a year. Say, you know what, in case maybe I don't get food later. Sometimes we focus too much on the zuhd part. We focus too much where the Prophet ﷺ did not have food. Yes, there were times where he had nothing to eat for days. There were other times where he got wealth. But what did he do? He saved some of it. So we make these intentions, we stack them up, and ultimately we want to please Allah. Right? Now, as much as I'm saying invest, right, you don't just save money, investing starts with saving. So you have to have money to be able to invest, which means you need income that is more than expenses. If your expenses are more than income, you will be losing money, right? So we need income more than expenses. So we need to increase income through our employment, through promotions, through side hustles, through entrepreneurship, through passive income, through different ways to increase the income. And then we need to lower our expenses through budgeting and getting rid of subscriptions and traveling less and eating out less and so on. But that's not the focus, so I'm going to move on to investing. How much to invest? As much as you can while taking risk. Because the stock market is risky, for example. So we create some fund, maybe we save 3 to 6 months worth of expenses in cash, and everything else we go ahead and invest. And we keep investing, and we put the tawakkul in Allah because there is risk. So we say, oh Allah, I'm being wise, I'm putting my money into good investments, but I want you to take care of it. So investment options. I talked about this yesterday. In zakat. Zakat is structured to make us invest according to the economics definition of investment. What does that mean? We invest in productive assets. What are productive assets? Productive assets are those things that generate income. They generate jobs. They generate earnings, they generate benefits, they create value. And so those are things like businesses. Like if my friend started an ice cream shop, maybe they need some cash and I can invest in their ice cream shop, right? Maybe there's a startup company, maybe there's some private equity. There's a lot of opportunities to invest in private businesses, but usually investing in private businesses requires a large amount of money. So public businesses, or the stock market, is easier to invest in because you can do it with just a few dollars. There's real estate, but again, real estate usually requires you to invest a large amount of money. We'll talk about real estate funds later. And then there's non-productive assets, or idle assets. These are things that don't generate income, they don't generate benefit or value, but you can still put your money into them. It's not wrong, it's allowed to do so, it's permissible. Things like gold, things like silver, things like cryptocurrency, things like a house or a land that you buy that just sits there while you wait for the value to appreciate. These are called idle assets because they're not doing anything. Gold is just going to sit there. It's not going to create jobs. It's not going to benefit the macroeconomy. It's not going to create products and services, right? So again, permissible to do so, but Warren Buffett doesn't like to put his money into idle assets. Neither do I. And zakat is going to be higher in idle assets because it's just sitting there making 2.5% full zakat. So Allah wants us also to circulate wealth, to put it out there. That's why investing in productive assets is the better way to go. So I'm going to talk about the stock market because I'm going to start by talking about the stock market because that's probably the easiest place for most Muslims to start investing. I'm not going to get into what stocks are, but rather just say stocks are just a share of ownership in a business. So if you're going to buy a particular stock, you should know what type of business you're investing in. And most importantly, I would say if you're a beginner, or even if you're intermediate, and probably also if you're advanced, don't invest in singular stocks, but invest in funds. A fund takes many stocks together and invests in all of them simultaneously. So your money is going into many stocks all at the same time. They make investing easier, that diversifies your risk by putting it into many things, and there's two types of funds. Mutual funds, which tend to charge more money, and exchange-traded funds, which tend to charge less money. Tend to, okay? And I recommend exchange-traded funds because they cost less. What are the two best options? The two best options in the market are HLAL and SPUS. Okay. Both of these try to buy a large part of the stock market. It's similar to the S&P 500. So they try to take everything in the S&P 500, which is like the 500 biggest shares in the US stock market, and they remove all the haram stuff and they leave the halal. Okay, so that's what they invest in. And if you look at the performance of HLAL, it has pretty consistently beat the US stock market. So investing in halal actually has resulted in higher returns. Same thing in SPUS. It has beat the US stock market pretty consistently. And if you compare the two, SPUS seems to have beat HLAL most of the time. Okay? And I prefer SPUS, and here I'm listing why. Because it costs a little bit less, because it has had historically better returns, it gives you better dividends, and the zakat obligation is a little bit less as well. Okay, so SPUS, if you're going to invest in one thing, I would recommend buy SPUS. Okay? You do have to worry about taxes on stocks. And so when you sell stocks, you pay capital gains. And if you receive any income from stocks, those are called dividends. So you have to pay taxes on both of those. And I'm not going to get into detail here other than to say, when you invest for the short term, you end up paying, depending on your tax bracket, up to 37% tax on the money that you made by buying and selling stocks. 37% is very high. And it depends on your tax bracket. But if you bought for the long term, the maximum you pay is 20%. So I highly encourage, just for tax reasons, to invest for the long term. Same thing with dividends. If you buy for the short term, you pay up to 37%. If you buy for the long term, you pay 20%. That's not just true for taxes, that's also true for zakat. Okay, you do have to pay zakat on stocks. By the way, for those that want to know how to calculate the zakat on stocks, you don't have to sit there and do it by hand. There's a tool available. Just go to this website, or you can use the mobile app connected to your brokerage. Okay, and it's very simple. Put in what you own, how many shares you have, do I have it for the long term or the short term, and boom, it will tell you exactly what the zakat is to you. Okay, very straightforward. So write down that URL, take a photograph of the slide, and something that I want to show you is if you're investing for the short term, you will, let's say you have $100,000 invested in stocks, the zakat you will pay will be on the full market value. 2.5% of $100,000 is $2,500. It's a lot of money. If you invest for the long term, then you're treating the stock investment like a business. And your zakat obligation reduces. So for example, at SPUS, if you're investing for the short term, you would pay 2.5% zakat, which would be $2,500 on $100,000. If you're investing for the long term, you pay 8.5% of the market value. I went over this yesterday with the details. You end up paying $205 in zakat. It's a massive reduction in your zakat obligation if you invest for the long term. Okay. The other thing we need to worry about is sometimes that the stocks we invest in, they have some small element that comes from haram, up to like 5% might come from haram, and so we need to purify that investment. And the way you purify that, there's a guide up here, but a link up here. You need to make sure that if you're getting, let's say, like 3% of your profits from haram, you have to give away 3% of those profits. And there's a way to do that, and that's listed in the guide. I need to get to the advanced topics, so I'm going to get through these basic stuff rather quickly, but take a photo if you need to of the purification. And you can purify your funds. Their websites talk about how to do that. Active versus passive investing, this is just me telling you to invest for the long term. If you invest for the long term, it's simpler, more tax efficient, less risky, less zakat obligation, and you don't need to worry about when to buy or sell. Okay, so as a beginner investor or intermediate investor, don't get into debt or try to minimize the debt. Start as early as possible. Like you saw what happened to Ahmed's portfolio over time. Keep investing on a regular basis, ideally from every single paycheck. Keep purchasing halal funds, ideally SPUS. Hold for a long time. Be efficient with taxes by not selling in the short term. On an annual basis, pay your zakat and purify. And seek Islamic guidance from scholars. Right? Don't go to TikTok. Okay, now we get to the advanced investing. We have little time, but we'll try to do as much of this as possible. Number one, the rule when it comes to transactions in Islam is al-asl fi al-ashya'i al-ibaha. The default state of transactions is permissibility. And so things by default are allowed. When someone says to you something is haram, they need to bring the evidence to show you it's haram. Having said that, the problem with financial transactions and contracts nowadays is many of them are based on interest or riba, which is haram, or riba-like concepts, which are hard to understand sometimes. And so you do need guidance from Islamic scholars to understand what's kind of what's all. But the default is, look, Islam allows bartering, trading, buying and selling for profit. Yes, for profit. You can be employed, you can rent, you can invest, you can do all of these things. You can own things, you can have a market economy, market forces are allowed, you can make profit. All of this is fine. What's not allowed is anything that's unethical. Islamic finance is just ethical finance. Personal Islamic finance is personal ethical finance. That's all that matters. So what are the things that are unethical? Well, if something is haram, which is probably because it's harmful for you, that's why Allah made it haram in the first place. Allah didn't just choose to give us an arbitrary list of do's and don'ts. Everything He prohibited for us is prohibited in this life because it's bad for us in this life and it's bad for us in the hereafter, right? Everything that's haram for us is harmful for us. We may not understand exactly why, but definitely it is harmful for us. So we know, if you go to like Yahoo Finance ethical screen, it'll show you these companies deal with alcohol, that's bad. These companies deal with pornography, that's bad. These companies deal with tobacco. So these are universal values. We all know that. You don't have to be Muslim to know alcohol is bad, pornography is bad, tobacco is bad, child labor is bad. All of these things are bad. And so anything that's haram or promoting haram, we should not invest in because we are encouraging, owning, promoting haram. Simple rule. So no companies that are dealing with beer and alcohol and pornography and all these other things. Number two, no dishonesty, no cheating. Number three, no injustice. Do not take away someone's rights. This, by the way, is why the riba is haram. Because the idea behind interest, an interest-based loan, is I will loan you money. If I loan you money on interest, I get a guaranteed return. And it doesn't matter if you make money with it, if you lose money with it, what happens to you? I don't care, I get my return anyway. It's unjust. What Allah wants is for us to share in the profits and the losses. If I'm investing with you, I should share in the profit and loss. Why do I get to have a guaranteed return while you have a not guaranteed return? That means my return is misaligned with my risk. You took all the risk, I got all the return. Or you're taking the risk, I take the risk and you get the return. So all Islam is trying to do is align risk and return, right? If I'm taking the risk, I should get the benefit. If I'm taking the risk, I should get the loss. And so that's why I invest all. So any contract, don't just look at it as interest and riba. Any contract where one party seems to be taking the risk and the other party seems to be getting the return, that's problematic. Okay? It's a broader concept than riba. The other concept that's usually misunderstood is this concept called love. Because people translate love as uncertainty. A contract with uncertainty is not allowed. Or a contract, sometimes they say, a contract with excessive uncertainty is not allowed. So then people start saying, oh, investing in like venture capital is not allowed. Well, that's not true. What Islam is trying to say is love is one of two types of knowledge gaps. Either it's a gap in information where I know something and you don't, therefore I'm sort of cheating you. Like if I'm selling you a car and I know the car has a defect, but I don't disclose that to you, that's love. It's called asymmetric information in economics. It's I am cheating you somehow, or I tell you I sell you one of the two cars in my garage, but you don't know which one it is. Or I sell you, it's a variety of different transactions where there's some type of knowledge gap. That knowledge gap either creates unfairness, injustice, like a type of exploitation, or the knowledge gap could result in some sort of a dispute or a fight. If a contract doesn't have complete information, like you sell a house but you don't know which house it is, that's going to create a dispute. That's love. So the types of uncertainty that are impermissible in Islamic contracts are basically knowledge gaps that result in dispute, knowledge gaps that result in exploitation of one of the parties, or, I didn't list it here, but like gambling basically. Gambling and cheating. That's a type of uncertainty not allowed, like playing poker or slot machines, something like that. But everything else is generally allowed. Okay? So based on that, if you look at the market, what's not allowed? Anything dealing with riba, interest, savings accounts, interest-based checking accounts, high-yield accounts, money market accounts or fixed deposits, annuities, bonds, T-bills, T-notes, treasuries, all this stuff. Margin trading, that also deals with riba. Preferred shares, convertible notes also deals with riba because it's an unjust system where some people get more returns, other people get less returns. It's an unfair system. That's why. Derivatives, futures, forwards, swaps, and options. These are all not allowed because they result in unfairness. One party gets all of the benefit, one party loses. Derivatives are zero-sum games. One side wins, one side loses. That's why they're not allowed. Short positions where you wish other people unwell, like I wish the value of your company goes down so I can make money. That's not permissible either. We want everybody to do well. All transactions should result in a win-win scenario. And contracts for differences, which are contracts that don't even deal with real assets, it's just made up money. So these are the things that are not allowed, but other stuff is allowed. So we can buy individual stocks. Individual stocks, we require that we screen them. We make sure they're not dealing with too much riba, either they're taking too much riba or giving too much riba, and that they're not earning too much money from halal. So there's a lot of apps that do this. I personally recommend Zoya. I recommend Zoya because I'm actually an advisor to them. I know exactly how they do things. I trust them. They've been around the longest. This is the app that I recommend, and you can use any of the other apps that you like as well. There's also many more halal funds beyond what I told you about. So I told you SPUS, right? There's now there's 15 more exchange-traded funds. SPSK, SPRE, SPTE. Some of these focus on different things. So some of these, like SPRE focuses on real estate, okay? SPTE focuses on the tech sector. Some of these focus on global markets, like the SPSK. So there's all these different funds out there. Why did I not recommend them? I didn't recommend them because many of these are either more advanced, or they have lower returns, or they haven't been around very long, or they have other types of issues. Because if you want to select exchange-traded funds, there's a lot of factors to consider. What Like, what index does it follow? What's the expense ratio? How expensive is it? How well does it track the index that it's following? What's the volume? What's the turnover? There's a lot of factors to consider. And when you look at these funds, taking all of those factors into consideration, I kind of chose the best one for you and said invest in SPUS. But just so you're aware, there are many, many more funds that you could invest in the market. Okay? There's also many mutual funds in the market. There's those that focus on growth, those that focus on generating dividend income, those that focus on, these are all going to be one list at the end here, bond-like instruments, and those that focus locally. So there's a lot of different mutual fund options as well. Again, if you're in doubt, just buy SPUS, and you don't have to worry about any of this. But if you want to get into more diversification strategies, I want global, I want this, I want that, you can go for mutual funds. You can also go for, now these are getting more expensive. So you can do robo-advisory where they invest in different funds for you. But this money that they charge is on top of the fees of the funds. So now you're double paying. You're paying for the fund itself, plus you're paying for someone else to manage your money. Or you can just give your money to someone else and have them manage it for you. It becomes quite a bit of expenses at that point. So every year you're pulling out more and more money, it becomes quite a bit. So anyway, my recommendation, buy SPUS in the stock market. That'll take you quite far in terms of investing. Keep buying it, and keep investing in that. But there's a point at which you need to start investing beyond the stock market, right? So you want to go beyond the stock market. Maybe you now have $250,000, $300,000 in money, and now you're going, hey, I'm only in the stock market. I would like to expand beyond this. Or maybe your age is getting greater, or you want to retire soon, or your health is being affected, you want to make sure there's a good amount of stable investments in the bank, maybe your risk tolerance is affected, maybe you need more income, you need money coming into your bank account. So this is where you can consider other things beyond the stock market, okay? There's a lot of other types of funds. You can take a screenshot of this. I really want to talk about what's coming in the next slide. Which is, when you start looking at other things, you have stock funds you can buy, like SPUS. You can also buy them in your 401k or Roth IRA. You can buy real estate for rental. You can buy real estate for flipping it, developing it, flipping it. You can be doing other things like working capital, inventory financing, and you can do private equity. There's a lot of different ways to earn money as a Muslim. And again, there's many companies that are doing these things. These are just some of the ones that I'm aware of, right? Going back to this slide, there's many ways. And a lot of times what I find people doing is they just look at the returns and they say, I just want the highest return investment. So let me just put all my money into private equity and venture capital. That's going to get me 20-25%. But that's not the only factors we should be taking into account. So if you're an advanced investor, you need to look well beyond that. And there's many other factors to consider. So yes, what are the returns? Sure. But we also want to look at what's the risk. What's the chance that your money could go to zero? Or what's the chance that you're going to lose money? And some of these higher return options have a lot more volatility and risk. The other factor to consider is liquidity. How quickly can I turn this investment into cash? So different investments like stocks, you can sell immediately. You get the cash immediately. If you hold on to something like gold, you can go out and sell it immediately. But if you have real estate, it's a little bit harder to sell. It takes longer. If you're in private equity, it might take years for you to convert your investment back into cash. Can you invest a small amount? Some investments you can, other things you can't. Can you invest every single month? That's a good way. So again, you can see the stock market's like very stable for being able to invest on a regular basis, whereas other investments have other drawbacks associated with them, although they may have higher returns. And as a Muslim, there's one other factor we need to consider, which is zakat. A lot of people don't think about zakat when they're investing. Some investments are zakat efficient. Why? Because the point of zakat is that Allah wants us to be circulating our wealth. Allah wants us to be spending our money, giving it in charity, and or investing it, creating beneficial products, services, jobs, etc. If we're not doing that, that's where zakat comes in, it's 2.5%. If you're doing it, your zakat burden is a lot lower. Okay, so the more we are holding on to an asset like gold, we'll be paying more zakat. The more we're investing in something like the stock market, we'll be paying less zakat. So when you take all of these factors into account, life gets much more complex. And I don't have time to spend an hour to go through the details, but I want to give you a preview of how to think about this. Is you might just focus on what's the return, but when you look at the net return, you have to consider how much zakat do I pay on it? How much taxes do I pay on it? How much tax refund do I get because I paid zakat on it? Okay? And then when you add all of that up, that's where you get your final net return. Okay? That's where things look very different. So a stock fund, even though you're earning a lot, at the end of the day, you still have to pay zakat and taxes on it. Stock funds in a retirement plan, like a 401k or a Roth IRA or something like that, you get a lot more return. Real estate rental, you get some depreciation benefit. Real estate flips, you end up paying a lot in taxes and zakat. You see how like you thought, oh, 10 to 15% might be a really high return, but at the end of the day, it only ends up being 5.5. Right? Inventory financing, again, because it has a very high tax burden, a very high zakat burden, ends up being a lesser net return. Private equity still generally is a good return, but again, you have to look at volatility. So the walk away here is when you consider investing, don't just look at a number and say, oh, their returns are 8%. Oh, their returns are 10%. I see many people do this. What we need to look at is what are the net returns after I pay zakat, after I pay taxes, after I get some refund back due to my zakat, all of those factors considered, and that is how you diversify your portfolio. So if I was to summarize, number one, invest as early as possible. Number two, if you're going to start investing, invest in the stock market, put it into funds. Ideally, SPUS. Keep investing. Keep putting money in. Pay zakat every year. Pay your purification amount every year. Once you get to an amount that's very large, let's say $250,000 to $300,000, at that point, consider other types of investments. Right? Those other types of investments might be any of these things. It could be real estate, inventory, private equity, venture capital, etc., etc. There's many halal options out there. People that aren't halal options, there's many halal options out there. But as you are considering those options, make sure to qualitatively evaluate all of them to see what are the returns, what's the risk, what's the liquidity, can I invest a small amount, do I need a large amount, how quickly can I get back, all of that. And then do the full math to see what the returns are after zakat and allocate your portfolio accordingly. I've got like 7 minutes right now to take any questions, and there's an extended Q&A session after Umer where you can come in and ask any question you like related to money matters in Islam, halal money, zakat, investing, anything you like related to money, you can come and ask those questions. But right now, we'll just open it up to questions here.
Sheikh, I see a lot of questions from the app coming through. There's like 3 or more asking about the slides. Can those be made available?
The slides can be made available. Any idea how we can share those?
We'll figure it out by session 3. So come to session 3 and we'll get the slides to the shop.
Okay. Yeah, the slides can be made available.
So the question is about the fixed income, the interest which we are not available haram, and the intention. I have emergency fund and it generates not much interest. So if you move that money into a CD or anything that generates interest with the intention to give that interest away, is that permissible?
The question is, if you take your cash and you put it in an account that earns interest because you want to take that interest and give it in charity, is that okay to do? The scholars are different on this issue. I personally strongly suggest against it because to earn haram and then give it away in charity seems entirely unnecessary. So just let it be. It's only 3 to 6 months worth of funds, that's fine. Just let the cash sit there. Or you can buy something like GLP or silver. There's a lot of ways you can actually buy like gold and silver. I didn't put this up there, but like you can buy like gold, silver, platinum. You can buy some combination of those that protects against inflation. That's another way to deal with it. To put it into a CD, I would recommend you use it.
Question from the app. Since bonds are haram, what alternatives are available to Muslims besides cash holdings?
Since bonds are haram, what alternatives are available to Muslims? So there's several alternatives. One of them is just investing in a company like, for example, Amin Housing Cooperative. They get you about, I think, a 4% return, where they take your money and they're using it to help people buy houses, so you get rent money. NIA works the same way. You get about 5% return on that one. Provision Capital is another one. I think you get about 12 to 13% return of those guys. So it's pretty decent. But all of these are funds that are available. Some of them are more less risky funds like bonds, like rental based, and others are more risky funds like the inventory financing based. So there's several options available that exist other than bonds.
So for those of us who get the retirement benefits from work, and most of them goes in through a 403B plan, which are very restricted, there's no brokerage link account. How do we choose or funds within those plans? And is it better to just opt out of those and just do traditional IRA instead?
That's a really good question. So the question is, for those that have a 401k plan or a 403b plan, or a Roth 401k or other types of options that you get from your workplace, sometimes the options for investing are extremely limited, and you're not able to invest in very, very head-on stuff. So one option is to try and find the most head-on option. One option is many of these plans will allow, like you said, something called self-directed investing or brokerage link, as Fidelity calls it. There's other names for it. And if you ask your 401k or 403b provider, they'll tell you that will allow you to open a brokerage account, buy your own shares. That's one way to deal with that. If you're not able to deal with that, then you try to find kind investments in there, like maybe something like amount of mutual funds, something like that. If you're not even able to find that, then you may invest in something that's as head as possible, like the S&P 500. The problem that happens is when you try to go do the purification math on S&P 500, it ends up being that about 30% of S&P 500 is non-permissible. So you have to give away 30% of your gains, 30% of your profits, dividends, capital gains, all of that. So oftentimes when you do that math, you may find that it's not worth it to do the 403b or the 401k. You will find that to be the case at times. So for each individual, you have to go through the analysis. If you get a brokerage link, fantastic. If you can find something like money mutual funds, great. If you end up buying S&P 500, the purification may make it not worth it.
Question from the app. Do the halal funds you mentioned account for companies dealing with Israel, a lot of tech companies that are popular investment funds?
Excellent question. So I get this question quite a bit, especially with the BDS movement and what's going on with these. Most of these halal funds, like if you look at these halal funds that were up on the screen, almost all of these exchange traded funds have companies that people have problems with. Companies like Microsoft, companies like Amazon, companies like Google, which all have projects with the IDF and with Israel in general and so on. So people ask, well, these companies are dealing with some haram. In fact, they're dealing with genocide, right? This is a big problem. How do we tackle this issue? So number one, if you want to customize your own fund if you want to exclude certain companies that you dislike personally, there's a website called Amal Invest, AMAL invest.com. There you can say, I would like to get something similar to SPUS or HLAL or whatever, but I'd like to exclude certain companies. You're free to do that. What's the general answer? The general answer is as follows, okay? The scholars, because of the need and the necessity for people to be able to invest, because otherwise zakat and inflation will just keep the money up. Because of the need to invest and very few halal options, scholars around the world have permitted up to 5% of your investment coming from impermissible sources. Up to 5%. And then what we do is that's why we do purification. Because we have to take that impermissible portion and give it away. That impermissible portion may be coming from riba, interest, it may be coming from alcohol, it may be coming from gambling, it may be coming from something else. It may also be coming from something that is dealing with Islam. None of these companies, I know people like to, it's good that we speak out against this, the genocide is disgusting, it's evil, it's wrong, it's very problematic. But if Microsoft is getting 1% of their revenue, or maybe less than that, from Israel, that doesn't make Microsoft halal. Okay? Just because it's getting 1% doesn't make it halal. Now, we would want to see that be 0%. So we continue with our divestment protests and our divestment opportunities, and we look at, I forget what it's called, ASFC or AFSC, they have a divestment list of companies we should not invest in. That list is very clear. There's a list of companies like Chevron, like Raytheon, like a whole list of companies that we should not invest in because these companies deal with genocide at a larger scale. cannot invest in those, okay? Those would be halal. But investing in companies like Microsoft, Google, Amazon, we cannot call it halal. If we prefer to opt out of it, we can go to a website like I'm going to invest and do that. But we can't judge others because it is halal. At the end of the day, it's halal. Yes, it's problematic, but so is riba, by the way. Allah says in the Quran that those that deal with riba, then warn them of a war from Allah and His Messenger. Okay? So just even dealing with interest is a type of war against Allah. It's a disgusting thing. Dealing with interest, riba itself is disgusting. Okay? And yet scholars have allowed up to 5% of that because of need and necessity. So again, there are companies that are very clearly problematic. They're generally excluded from these funds. When I've gone through these funds, I've generally found them to be excluded. Every once in a while there might be one that shows up, but they're generally excluded. Other companies that we're speaking out against, they are not doing, they're doing something less than 5%. And in the case of IDF and Israel, I haven't found any company that's above 1%, by the way. And so it is okay to invest in those, but we speak out against it.
Jazakallah khair. Yeah, we need to end now.